Hey guys, wow, it is not good for Tesla. They have been having a beatdown over the last 6 months, and it doesn't appear to stop anytime soon, with their price dropping down to less than $163 today. We're going to go over the different ways Tesla makes money, what their P/E ratio is, what is a fair P/E ratio for Tesla, and where I think their price could end up at the end of this downward tumble. But first, I want to welcome you all back to Freeman Finance and Crypto, where if it makes money, it makes sense. Over the last 28 days, we had almost 1,000 new subscribers, and if you're not one of them, please subscribe to the channel and welcome to the Freeman and Finance family. And as always, none of this is financial advice. So let's get into the price. After hours, they are at $162.90. So let's clear this up out the way a little bit and just look. Over the last 6 months, it has went from $275 to now we're at $162.5 US at closing. What has been happening? Tesla is not valued as a traditional car company. They are valued as more of a tech company. They have had an extremely high P/E, price to earnings ratio, for a long time. And we're going to go over what is a traditional car manufacturer's P/E ratio, what is Tesla's, what is tech companies. But first, let's get into what does differentiate Tesla from other regular car companies. So when you look at Tesla, of course, they sell vehicles that they have been constantly cutting the price on to pinch the necks of Ford and all the other companies that are not profitable right now and trying to get into the EV sector. And that has lowered their earnings. But maybe it's a long-term strategic plan for that. But they also have solar roofs, solar panels, power walls. This is all very expensive side hustles, if you might say, that traditional car companies do not have. And also, traditional car companies do not sell the gasoline that goes in those vehicles. Tesla does sell the gasoline that goes in their vehicles. If you're getting the electricity at your house, they sell that, and they also have earnings from all the supercharging stations. So that is what differentiates them, and why they do deserve a higher P/E ratio than a traditional car manufacturer company. But let's just look at their earnings. They have missed earnings the last 2 quarter reports. So as you can see here, third quarter of 23, the expected earnings per share was 64 cents, and they reported 53 cents EPS. And they didn't miss it as bad in the fourth quarter, but the expectation was lower. So the expectation was 60 cents EPS, and they came in at 57 cents. And I think it's April 17th is when their earnings release. We'll have another video following up with it the day of that, but they may very well miss again. So that is not good for Tesla, but it may be because of them cutting prices on their vehicles and stuff like that to pinch the necks of some of these other car companies. It's very, very possible. But let's get into what is Tesla's P/E ratio currently. So if you look over the last year, they've had a P/E ratio as high as 83. That is up there higher than specific tech stocks. And now currently, as of today, they're about 37.72 price to earnings ratio right now. So we're going to get into what are traditional car manufacturers' P/E, what is tech companies' P/E, and what is my personal opinion on what a fair P/E value for Tesla would be. So if we look into the tech sector, the average tech, and of course Nvidia is a lot higher than this, but this is the average in the tech industry, is about a 46 P/E ratio. And as we see, Tesla has been, a long time ago, was well above that, almost double that as a P/E ratio, and Tesla was being valued as a very hot tech company, and this just all started skyrocketing during COVID. But currently they're at 37. Well, what are traditional petro automakers at? So it really varies on the company, but you've got some like Ford that are 7, that are some of them are 8, but something that I think would be fair to kind of compare to is something of very high quality like Toyota. Toyota has about a 12 P to E ratio, we're say. And then if you scroll down, Tesla, this is old. This is off the last quarter. It's currently dropped as of today, but they were 47 and they're just barely underneath Ferrari. That is 60. And Ferraris cost quite a bit more than a Tesla, so their earnings will be more. But so let's just say like Toyota has about a 12, okay? And Tesla, let's say, is currently at a 36. So do I think Tesla should be a 1-to-1 P to E ratio with Toyota? No, I don't at all. They are a tech company in the sense of a new technology with electric vehicles. They have multiple streams of revenue outside of a traditional car manufacturer, which is solar panels, solar roofs, battery packs, as well as they own the entire charging station in North America. All the network, it's got to be 95% of it or something, is Tesla superchargers. And they also have licensed that technology to Ford, Rivian, different manufacturers, so they will earn income off of that. So they have a lot of revenue streams. So my personal opinion is about a double of a good car manufacturer, traditional car manufacturer, would be a good P to E ratio for Tesla, and what I would feel is a fair market value. So what that would mean is about a 24 to 25 P to E ratio for Tesla would be fair in my opinion. And if you do the math from 36, 37 P to E ratio down to 24, that's about a third. That takes Tesla's price to about $105. I don't know if it'll get there. I don't think it will get there, but that is what I could see as a fair value for it. But I definitely don't think the bleeding's done. If come April 17th or April 24th, I forget exactly the date of the next earnings, if they miss again, it could get bad for Tesla. And I'll definitely be looking for call options. I'll definitely be looking at actually accumulating the stock itself the lower we get. But like I said, thank you all for joining Freeman Finance and Crypto, where none of this is ever financial advice, but if it makes money, it makes sense. If you haven't subscribed, please subscribe, hit the bell notification, and we'll see you on the next stock video. Thank you.